Good morning, everyone, and welcome to Tuesday morning. It's Stephen Whiteside here from the Uptrend.com. In the pre-market this morning, stock index futures are mixed. We've got Dow futures lower on the back of Boeing making a new low for this move on Tuesday morning, while we've got the S&P 500 is flat and the NASDAQ futures are up slightly in the pre-market on Tuesday morning. Commodities are mixed with gold trading higher while crude oil is down on Tuesday morning. Now, the VIX is still on a sell signal. Things would change on Tuesday if it closed above 1723. Now, traders have got a bit ahead of the VIX, and going into October, they've already bought the ETFs. They are on buy signals already as of Friday's close. So just be aware that some people are getting a little ahead of themselves. Obviously, the VIX index is still technically on a sell signal, and stock index futures are still holding up very well. The iShares for the TSX 60 dipped into the channel on Monday, but no change in trend there. Similar situation for the SPY and for the NASDAQ 100, so no trend changes there whatsoever. Looking at commodities, crude oil was down slightly yesterday, just by a penny. It's down in the pre-market this morning. Natural gas moved up, making a new high for this move on Monday. Gold pulled back yesterday. It is up in the pre-market this morning. No change there. And then silver dipped way into the channel yesterday, so it closed below $30.92 would give us a sell signal on Tuesday. Now, for the month of October, I thought we'd do something a little different, and so each day I'm going to analyze one stock using all of the charts in our database. To start off, we'll start off in the A's, looking at Apple, and when we bring up Apple in our database, one of the first things you're going to notice is the fact that it's currently ranked a 9 on a scale of 0 to 10 on the weekly charts and a 10 on the daily charts. So when you're looking at a scale of 0 to 10, you're looking at something that's currently overbought, and there's probably not a lot of easy money to be made here. Of course, there's no indication that Apple's going to stop going up or head down, coming into the first day of October. But just looking at the numbers, it tells me there's no easy money to be made in Apple at the moment. This isn't the time and place you throw new money into this stock. Now, there's one monthly chart, 7 weekly charts. They're only updated on the weekend. You don't have to revisit them on a regular basis once you've done your initial analysis. If you're a trader, you don't need to look at those on a regular basis. And then you've got 7 daily charts. And of those 7 daily charts, I really just use 2 when I'm trading a stock. I don't go back and look at all the other charts every single day. So there's a time to do analysis and there's a time to take action. Today we're going to do analysis, and then I'll show you the charts that we use to take action. A chart is worth 1,000 words. I will not be speaking 1,000 words for each one of these charts. They're all color-coded. They're all blue for bullish, red for bearish. So as soon as you look at a chart, you should be able to get a feel of what's going on now and what has happened in the past. This is the monthly right side chart. You can see this stock is going from the bottom left-hand corner of the screen to the top right-hand corner of the screen. So that's a stock that's in a bull market at the moment. Now, when we look across the bottom here, there's only been 3 months in all of these years in which we had 4 red dots. So Apple has been very strong even in weak periods. And so there has been a couple of times over the past few years where there was weakness and daily, weekly sell signals, but it hasn't been driven down. Investors were not willing to continue to buy, but they weren't aggressive sellers either. Now, moving on to the weekly charts, here's the weekly flypaper channel chart, and you can see we use this as a potential area of support, and we want to be buying off the dips. And if you go down to the bottom of the screen, you can see when low-risk opportunities came up. And of course, we're not going to buy because we got to the flypaper channel. And you can see here we got to the flypaper channel and then it broke. You have to wait for the market to start to turn around before you jump in. Yes, if we go back and say, yeah, you could have bought right at the bottom there, we didn't know that at the time. At the time, you were looking at a stock that was down a couple of months in a row, and we were not going to step in and just buy there. We cannot influence the price of a stock and the movement of the stock. We can throw our money in, but unless the rest of the market, especially the pros, come back in and this chart starts to turn color, you're not going to make any money. So we want low risk opportunities. Looking at this chart, you've got all the major weekly moving averages, 200, 150, and the 10-week moving average. You can look at this chart to see where the market could potentially have areas of support for Apple. And of course, if it was trading underneath, you'd consider all of these potential areas of resistance. We are still projecting higher prices here. So if we can hold this uptrend line, you can see us trading all the way up towards 280 in the next year. Looking at this chart, first thing I want to notice that I notice is the fact momentum is starting to wane over here. And you can see when that happened back here as well, that the market started to trade sideways. So there's no indication that Apple is going to roll over up here, but I think we're definitely running out of steam up at these levels. Now, here's your weekly price targets. So if you want to have targets for 2025, there they are, 250, 275. Those are your targets for 2025. If we keep moving, if we pull back, you can see 200 and then 175 would be your targets to the downside. But right now we are stuck to the 225 level. Looking at the pros and the public, hey, this is pretty easy to understand. You want to own stocks when the pros are in control, and you don't want to own them when the pros give up control. Here's our weekly right side chart. So if you're a long-term investor and you're using the weekly charts, if this coming Friday, Apple were to close below $215.55, we would be sellers on Monday morning at 9:30. Now, our last weekly chart is the weekly panic zone chart. And if we go back in time, you can see the last time there was a pressure zone when we were trading down at the bottom of the panic zones. That's the setup for a low-risk buying opportunity. You're not going to buy because we're there. We're going to buy because we're coming off that condition and the stock is starting to move up. So don't think that we could buy, on that particular week. We didn't know that the stock was going to stop moving lower until it started moving higher. So we always want to wait for the market to tell us which way it wants to go. We cannot make a stock move up on our own. Now, here we are up at the top of the weekly panic zone chart, currently ranked at 9. We're projecting slightly higher here, but notice that, from this point on, we're projecting lower prices. Now, the market doesn't have to follow our projection. A projection doesn't know what it doesn't know. News could come out tomorrow to spike Apple higher. News could come out tomorrow to spike Apple lower. We're just waiting for the market to do what it wants to do. And of course, we'll be looking for our next early warning signal. Since this is a weekly chart, that will not come until at least this Friday. Now, looking at the daily charts, there's 7 daily charts. Typically, I'm looking at 1 or 2 of them on a regular basis if I've decided to trade a particular symbol. So the right side chart is the one that I work with the most. And of course, you've got your price target chart. The price targets don't change very often. You don't have to look at them every day. Of course, it's exciting to watch a stock move up towards your price target. And, you may want to look at it on a regular basis, but those numbers are pretty well good for a while, depending on the volatility of a stock. Now, looking at the daily flypaper channel chart, you can see on a daily basis where we look for low-risk buying opportunities. We expect when the stock pulls back, if it's still in a bull market, participants will want to buy the dip. And if it starts to trade below the flypaper channel, then you know that the sentiment on this particular stock has changed, and we'll have to wait until we get up over the flypaper channel once again. Looking at the daily projection chart, you can see that we are still projecting higher prices here as long as this uptrend line holds. You can see we're working ourselves into a triangle here and looking to see if we can break out above it. You've got the major moving averages, the 200-day, the 100, the 50, and the 10. And of course, these could all be potential areas of support. On this particular chart, you also have the moon cycles at the bottom. If there's a lack of stimulus, a lack of news on a particular symbol, then the stock will probably move with the moon cycles. And so you can see there was a bottom there. And then you can see there was another bottom right there. So if there's no news, look for a moon cycle as a catalyst for a possible trend change. Looking at the midterm chart, again, look at the momentum. We peaked back here in July and momentum has drifted off over the past couple of months. So things are really slowing down for Apple at the moment. Our next price target is $237.50. But if you've been trading Apple, you know we didn't get there last time. Got as high as $237.23. So on any of these price targets, it's always good to put orders in just below them because everybody else is looking at that as a potential area of resistance. It would be nice if we hit to 37.50 and started to move up above. You can see that on the daily chart, 250 and 260, 250 would be our next targets to the upside. Looking at who's in control, you want to own a stock when the pros own it, and they own Apple at the moment, but they're not too excited about it. It's interesting. Apple's been on a buy signal for a while now, but the pros have not really been jumping in here to take control. There's the daily right side chart. We're currently on a buy signal. Things would change on Tuesday if we were to close below $224.10. Of course, if that doesn't happen on Tuesday, that lower channel line is going to continue to move higher. Daily, we don't put intraday stops in to exit a trade. We only put intraday stops in to take profits. If we're going to get kicked out of a trade, we really want the pros to tell us that they really want to get out of the trade, and that can only be, you can only see that in real life on the closing basis. So we don't care about intraday activity to get kicked out of a stock. We're waiting for the closing price. And then looking at our panic zone chart, you can see we're up at the top of the panic zones, currently ranked at 10. We had a low risk opportunity. That's what we're on right now, and looking to see if we can take out that previous high and head towards $250. Okay, folks, that is all for this morning's presentation. Obviously, Apple's a stock you want to own. It's not a stock you want to jump into on Tuesday morning. You could wait and maybe through, if there's any selling in the month of October, that may set up a low-risk buying opportunity once again for Apple. We'll just have to wait and see. Currently, it is overbought, and there's no reason to sell it. But again, if you're looking for a low-risk opportunity, Tuesday morning is not the time and place to be buying Apple. Enjoy the rest of your day. As we go through doing a different stock each day, it will get faster because I'll have to explain less on a daily basis, and we can cruise through them fairly quickly. You have a great day. Next time you'll hear my voice is on Wednesday morning, and at that time we'll take a look at the overall market and a new stock.